Welcome, everyone, to Together We Serve TV show. So happy that you're here. My guess, we might have a little technical difficulties, but that's what happens with doing type of things. Can you hear me, Brian? Give me a thumbs up. Yep, okay, he's all good. We fixed the technical difficulties. So I'm excited. Brian was on my show a couple weeks ago, my podcast, and he's got a unique fund that he uses tied to real estate. And I have real estate myself, so I know the power of it. So we're going to really show you together. He can show you as he serves you how this can be a powerful tool for you as well. Brian, welcome to the show.
Thank you so much for having me on, Steve. It's an honor to be on. I appreciate it.
And it's an honor that technology worked. I was ready to click the technology button.
Right at the last second. Yeah.
Amen. Real estate. Scary for some people, exciting for others. Talk about it.
Yeah, well, it was scary for me to start. I did a lot of education and did a lot of self-education, reading books and working, getting some mentors and stuff like that. And then, doing that my first single family flip was definitely a fear that I had to overcome, and that was a challenge. But after doing that first deal, it definitely makes things easier going forward.
Yeah, and as I said, I'm a landlord, own property. So I know the feeling of getting that rent every month or whatever the way that you're making it. It's such a breath of fresh air that you really have to do much. Now, I know there's going to take funds to get into, but you help people that can't go out and say, I want to buy 2 rental properties. How do you help me, that person that wants to do that?
Yeah, so a few years ago is when I got into larger multifamily properties, so investing in 100 plus unit apartment complexes and things like that. So I've been a partner on multiple deals, but it didn't take long for me to realize, especially with the economic climate and environment that we're in, that I wanted to do things a little bit differently than just investing in one particular apartment building. So to your point, I created a fund, and in that fund, there's multiple real estate and apartment buildings in that fund that people are able to invest in. So instead of putting your money into one particular rental property or apartment complex, you're putting it into a pooled fund of multiple different apartment buildings throughout Texas.
I thought to bring myself back on, talk about technical difficulties. I'm talking away here. I'm like, what the heck? So is this similar to fractional stock purchases where like Apple might be 800, you can buy, like 0.25% of Apple and get paid 0.25%? It may not be similar, but that's kind of how I see it a little bit. Explain that a little more.
Yeah, I would say it's kind of like a mutual fund of stocks. So, you're instead of investing in one particular stock like Apple, you're investing in multiple stocks, just like you're investing in multiple apartment buildings in this case. And so you get a percentage ownership in that apartment building based in those multiple apartment buildings, or percentage ownership in the fund based on how much you put in the fund and how much is in the fund as a whole. So it's kind of pro rata based on, how much you put in and so forth. And it's completely passive. Yeah.
What's the fear that you hear from people?
Well, there's a lot of fear right now just because of where we are in the economic cycle, and with interest rates being so high, there's concerns. There's still concerns out there about recession, things like that. I haven't heard as much of that, but anytime there's uncertainties, that creates fear, and which also creates opportunities, right? Whether it's real estate or the stock market, when everybody is running away from something, that's probably when you want to look pretty hard to see if that's a good investment or not. But yeah, so that's probably one of the biggest things, and just interest rates have been high for a little while now, and not as long as they were low before, but the funny thing about interest rates being high right now, I've been investing in real estate for over 20 years. So I remember back when interest rates were at a higher rate than they are now, and you could still make deals work. And that's what's happening now. There's a lot of opportunities right now in multifamily because people that got into these multifamily properties a few years ago with variable rate debt, meaning like kind of like an arm for a single family property, but on a big commercial property like a multifamily apartment building. And so a lot of those obviously with interest rates going up, that's created a lot of issues. And so that's presenting a lot of opportunities right now. And so those are the types of deals that I'm investing in my fund, or those distressed sellers that need to get out of those properties.
Real estate's always been, hey, you got to invest in real estate. The Warren Buffetts, those people. How about the mother, the parents, they're in their 30s. They've got some extra money. Is it safer? And again, you're going to go through each client and go through if this is a good fit for them, correct?
Yes, yeah. So to your point, I mean, they would need to have some emergency funds and some. I mean, you don't want to invest in one of these deals, and this is the last dime that you have, or you don't have something for a rainy day in case you run into problems, because you will have problems, right? I mean, we always all run into problems in life and unexpected things. And so you don't want to use all of your liquid cash to put into one of these investments. The good thing is you can also, a lot of people don't know, but if you have an IRA, you can actually invest in these types of opportunities within your IRA as well, as long as you have it with the right custodian that's able to help you out with that. But yeah, each person's situation is different. So we would need to talk through that. I've had people that are actually, they're like, well, I don't want to get into these large multifamily deals. I want to be active. I want to have control. And I totally get that. And, those types of folks sometimes will go to single family properties and start with, a rental, which is how I started. And there's no shame in that at all. I mean, that's how I started. And that's how a lot of people start. It's kind of a natural transition when you're investing in real estate to kind of get a single family rental. And, we're all familiar with the house and how that works. And so that makes it a little bit more comfortable. But if you're wanting to be completely hands off, that's where something like my fund would definitely help.
Yeah. The struggles for people that have rental property, can they reach out to you for some help?
Sure. Yeah. I'm more than happy to help however I can. Like I said, I've been doing it for over 20 years. So I've flipped properties. I still have some single family rental properties. Actually, I've done Airbnb. I've done the smaller multifamily. I've done some wraps and some different creative financing things. And so, I don't pretend to be one of those people that, too high up on a pedestal that people can't reach out if they need help or something. I'm more than happy to help. I love real estate. It really is my passion. And so I love helping people however I can.
And that's why I have him on the show, because this financial real estate industry can be very cutthroat, right?
Yes. Yeah, for sure.
Yeah. I've known people who lost lots of money, lots of their savings, making the wrong decisions, working with the wrong people. And that's just life with a lot of things, but there's a lot more money involved with this than anything else. Emotions. Yeah, go ahead.
No, I'm sorry. I was going to say, yeah, typically your minimum investments in a lot of these types of deals is $50,000. So yeah, it's not like you're just going and buying, a few shares of Apple stock or something. You're putting in quite a bit of money. So
yeah. And it's not for everybody because of the cost of entry into this, which is okay. When you're ready, here's your baseline of what you want to get to. So if you're out there listening going, yeah, I can't do that right now, but keep in your back pocket portfolio. That's what a portfolio is. All these different things, and that your future portfolio, right?
Right. And I think, one thing I didn't mention, I was a stockbroker for about 10 years or so. So I had my securities licenses and I was in the financial, your standard, I guess you could say, financial services industry. And so, I do see I see it from some different perspectives. There's a lot of people in my space that will tell people don't invest in the stock market, only invest in real estate. That's the only thing you should do. And a lot of times that's because that's their business and that they want to get your money. But the reality of it is, I think it's important to be diversified. I think pretty much everybody, there's obviously always exceptions, but should have a part of their portfolio in real estate. I think it's just such a valuable way to build wealth and generate income. Especially from a passive standpoint, that I think it should be in everybody's portfolio. Now, what percentage that is, I'm not going to tell somebody you should have X percent in your portfolio. That's very specific to each person. And you can't just go through the standard financial advice and say, oh, it should be X percent. It really, there's, like you said, you're getting ready to say something about the emotional aspect of things, I think. And so emotions play a big role, especially in the stock market. And that's one of the things I do like about real estate, is that can help take out some of the emotion of investing. because unlike individual stocks and things like that, you can't just push a button and sell your house when bad news comes out. It's a little bit more complicated than that, right? Especially multifamily apartment buildings that are 20, 30, 40, 50 million dollars. That's not something you're doing with the tap of a finger. So, it does help to remove some of that emotional component. And I think that's actually a good thing.
I do too, because it's a big purchase. As realtors I talk to, it's probably your most expensive purchase next to a car that you're going to do in your life. And so it's going to bring all that fear and that being scared part of that. What is mindset? Because emotions are different. People go, emotions, mindset are the same. No, they're different to me. Because my mindset could be great. My emotions go, when I trade, they could go crazy. But I have a great mindset because I know I'm a great trader. Talk about those differences and how you work with people with that.
It's funny you mentioned about being a great trader. That was one of the things it took a little while for me to realize when I got my securities licenses and stuff like that. This was back in the 90s. And I remember you take all this education, you get these licenses and stuff. And some people, maybe not everybody, but some people tend to get cocky and think they know everything. And then so I was trading options and penny stocks and doing all these different strategies and things. And, and what I did learn is that, I'm not too big on watching my values go up and down so quickly like that. It does make me a little nervous sometimes. And so, the emotions can be a big part of it for sure.
I learned, I've been doing it 5 years. You got to be a good loser. Take that hit, just make it small, and we won't get into that too much. But that's
stop losses.
Stop losses. There you go. That protects your butt every time. It's CYA. Mm-hmm. And that goes with life. Make a decision, and if it's a losing decision, at least you make a decision. The same thing here. We both agree, and people out there go, "Yeah, you should have real estate," but if you're not ready, you're not ready.
Right. Yeah, and I talk to people sometimes, and they're they're kind of on the fence, and I tell them, I said, well, then don't do it, because these types of investments are very illiquid. So yes, it's good that it takes the emotional aspect out of it, but that's partly because, well, not partly, a lot of it is because it's illiquid. So, you can't, your money's going to be locked up for, 5 to 7 years. And so you have to think about that when you're investing in these types of deals. And so it has to be there, like you said, it has to be the right time. And if it's not, don't force it. Just, some people like to kind of see how things work and, wait a couple of years and just kind of, learn a little bit more, educate themselves. Everybody has to go at their own pace, but definitely if you're not sure, don't do it, because the last thing you want to do is be losing sleep overnight and then call me up and say, hey, Brian, I just can't do this. There's, interest rates just keep going up. I'm afraid that this is just not the right thing to be invested in now. I need to get out. And I'm going to be like, well, I'm sorry. There's not anything we can do. I mean, we can't, it took millions and millions of dollars of investor money to buy this apartment building. I can't just take out randomly $50, $100, $200,000 out of this investment. Where's that money going to come from? So that it's illiquid. So you can't really do that.
What's a great tip for the mindset of longevity? The 5 or 6 years or 45 years, because that's different than saying a 6-month CD. It's April, so October that money's going to be liquid for me. This is a whole different animal.
Yeah, mindset is interesting. I mean, it's one of those things. You do have to have a certain mindset to be able to invest in different types of investments. So, for example, right, venture capital, startups, things like that. I invest in those as well, but that takes a whole different mindset than investing in real estate or even investing in the stock market, because one out of 10 of those may make it. The rest of them are probably going to lose everything, and it's really risky. But it can do well if you do it right, investing in venture capital. But your mindset has to be, okay, I know I'm okay with potentially losing 9 out of 10 times on these investments, hoping to get like a 10x, 20x return on that one investment. So it takes a different mindset. And to your point, CDs, right? That's a different mindset too. And I think it takes a different mindset to invest in these different things, but you have to be able to marry that mindset of what's required in that investment to the mindset that particular person has. And so, you can't always just shift. Some people are able to learn and educate themselves and then maybe get a little bit more comfortable investing in something. But the chance of somebody that just is a real firm believer in CDs investing in venture capital is probably not going to happen. They don't have that right kind of mindset for that type of investment. So you have to kind of really have the two kind of come together at a certain point. It doesn't have to match up exactly, but they have to be in the same area to make it work. Otherwise, you're going to be selling, especially in the stock market, right? You're going to be selling at the worst time. You're going to buy high and sell low, which is obviously the opposite of what you should do.
Yeah. And my financial advisor, I've been with her 15 years. She's fantastic. Shout out to Zio out there. She did, she asked the question, are you risk adverse? Are you more risky? That sounds like it's important here too, as you meet a client or a client becomes your client, is because this kind of falls, well, where does it fall in the scale of risk adverse to risk to super risky?
It really depends because, while it is real estate, and so there's the value of that real estate, you don't expect that value to go to zero, right? But the important thing to understand in some of these investments in the way that they're structured, you're buying, let's say you're buying a $10 million apartment building. I'll just use some rough numbers, right? And you're getting a loan for $7 million. Well, the other $3 million has to come from somewhere. That's where the investor capital comes in, and the investors help pay for the down payment and things like that, right? So on the surface, you're thinking, well, okay, it's real estate. It's a physical asset, which is good. That's one of the great benefits of real estate. However, you have to understand that $3 million that came in was the down payment. So this is essentially, if you're looking at the capital contributions as part of the financing in a roundabout way, that's kind of 100% financing, right? You're putting in all this money. So the first person in line, if anything goes bad, is the bank, right? They have first position on anything. So if the deal goes completely bad, they are the first ones to get their money, and then the investors will get their money. And so if things go south really bad and a property, markets change and things really go negative, you can still lose all your money in real estate. Don't think that can't happen. And that can happen in the single family space too. So it can happen in real estate. I would say it's less common than in the stock market. But it can happen in real estate just like any other, asset other than, FDIC insured CDs and savings accounts, that, things like that. So yeah, it's still, when I have investors ask me sometimes, what's the worst case scenario? And I'm very upfront and honest with them. You can lose all your money. I mean, with the fund and the way I have it structured, one of the reasons I have it structured the way I do, and that it's diversified and in multiple apartment buildings with different sponsorship teams in different cities, is because I think that diversification really provides a risk-adjusted return that's better than investing in one particular apartment building. And so that was the whole thesis and the reason I created the fund, was to provide that diversification. And so, yes, it could still happen. Maybe every single one of those 10 deals is bad. It's very unlikely, but it could happen. And if it does, then you have a potential of losing all of your money, but it's less likely than investing in one particular apartment building where there's just one point of failure, right?
Right. You spreading your money out. It's like playing blackjack. I love blackjack, but it's gambling. Your risk is really high with that. Probably why I like it. Right. That's probably why I like trading too. So let's walk through the journey so people can understand. I become a client of yours. Can you walk us through the steps of they become a client? What happens?
Yeah. So once let's assume you're interested in investing, you become a client, you invested in my fund, which is what I have right now in terms of offerings. Where we are, the great thing about most of the deals in my fund, they are existing apartment buildings, value add, meaning, we're looking to, the groups are buying something where there's opportunities to do a little rehab, increase rents. It's kind of like a flip of a single family property, but obviously a much bigger scale. Mm-hmm. And so the benefit there is that there's cash flow from day one. And so if you invest in the fund, you're going to be getting monthly distributions on the investment. So you'll be getting some cash flow. Now, this is not meant to be a cash flow investment. It's really more growth play, because our projected annualized returns are somewhere in the 60 to 20% range on an annualized basis. Most of that is at the back end based on once the property is sold, right? Once you've executed the business plan, increase the income, which then increases the value of the property. So you get most of those profits at the end. But so you would get those distributions, you would get monthly updates from me as well, kind of showing you what's going on with the properties. And then obviously I'm always here as a resource to ask questions or anything like that. If somebody wanted to go look at the properties, I'd be more than happy to take them out there, look at the properties. My fund is only investing in Texas. So I'm born and raised here. It's the market that I know the best. And so I'm sticking to what I know. And so that's really kind of what it looks like for the most part.
So you don't have to live in Texas, which is great. I'm in California, so as part of your fund, I would just fly out and go, hey, let's look at the funds, and you do a tour and show the people what they're investing in, either before or after they've made the investment.
Yeah, if they want to see the properties. Now, keep in mind, Texas is a big state, just like California, and so they're all over the place. So I've got some in Dallas, Houston, San Antonio, right? An investment in Kyle, Texas, too, about 30 minutes south of Austin. So but I'd be more than happy to go out there and take them out there and check those out. I also am more than happy to dig deep into the investments into each property, why I chose those particular investments and everything. I'm not one of the partners running these deals. I structured my fund a little bit differently in that I'm not getting compensated to invest in these apartment buildings. Most of the people that do these deals, and this was me in the past, right? I raised capital for deals and did other things besides raising capital, but raised capital and people would invest in those deals. But I did get compensated for bringing those investors to the deal. With my fund, I have no incentive to invest in any particular apartment building. I'm just investing in what I think are the best deals with the best teams. And I like it that way. I like that I can honestly look at an investor and say, no, I didn't pick this because I'm getting, 2% of the property or anything. I picked this because I think it's a great deal in a great location with a team that has gone full cycle of multiple deals, owns the property management company, has all these great benefits and attributes. And that's why I'm investing in the deal. I don't get anything to do it. And on my fund right now that I have, the only money I actually make on the fund is the money that I've invested alongside my investors. So I've invested my own capital in the fund as well.
That's
kind of a long-winded answer to your question, but
no, I like it because now I understand a little bit. And I think that's a servant heart in the finance field. It's like, hey, I take 5% and then I disperse everything else out to you, or I take 7%. I mean, not illegal, but the way you do it's fair. So if I put $500,000, you put $500,000, we're getting the same distribution. You're just helping me find those.
I really look. So on this fund, I've got a 1% administration fee that I charge, and it's really just to cover expenses on the fund. I'm actually not taking any money out of that, so it's capped at 1%. If it ends up being 0.75%, if that's all that the income or the expenses end up being, then I'm only going to charge the 0.75%. I'm literally not taking any salary or money for myself in that. So I think that's it definitely aligns my interests with my investors.
Yeah. So, and when I put money into the fund, if you find 2 more properties, because you're probably out searching deals, seeing what's good, I'm part of every deal that you do. Correct?
Right. So, so the properties that I've invested in previously, you would be invested in those. And then the new ones that I acquire as well, you would be invested in those. That's right. And this fund is structured in that it's a 5 to 7 year fund. So what that means is it's not what's called evergreen. So I will be closing it to new investments sometime this year. And then at that point, then it's going to be a matter of kind of managing the fund. And then as deals sell, people get some of their principal back, and then the capital gains and things like that. And so, that's all going to be part of the returns that they get and everything. But it will be closed to new investments probably sometime this year.
Yeah. So it's opportunity for growth, it sounds like.
Right.
That's cool.
Exactly.
I love growth. When my money grows, I'm a very happy guy. That's a very good thing. Yeah. So I'm seeing this meme where is a picture of a multifamily complex, and you're going like this: "Hey, come join me. I found some great properties, and take your money and work with me." It just can't, because I like that. It's like we're all invested in the same. You're serving everybody the same as you're serving yourself.
That's exactly right. And, really this was created to kind of prove out a thesis. And I think I've really proven out most of that thesis to this point. And I really just look at it like, this is how I want to invest in multifamily going forward. If you want to kind of jump on with me and the way that I want to invest in these deals going forward, come on in. If not, that's okay. But I just feel like I said, it's a better risk adjusted return way to invest. And so, I look at it like I've created this investment vehicle for myself and other people. And so if you want to come on and join me, great, go for it.
What's the future of your company look like?
So I think it's going to be, primarily multifamily, residential. I plan to do a second fund probably sometime toward the end of this year as well. I'll probably still stick to primarily residential, and that could include some single family, that could include multifamily. But I feel like I've really, kind of narrowed down and really understand this niche really well. And so I think I'm going to really stick to that. And so in terms of the future of my company, I think that's what it's going to be. I'm going to continue to focus on residential, again, multifamilies, maybe some single family in the next fund, and probably primarily sticking to Texas, although I may go into some other areas of opportunity just depending on where they are and what kind of analysis I can do on those different areas. But I think that's going to be my primary focus, and then just keeping my fees super low. I'm not looking to try to add a bunch of fees to these things and, make, $5 million a year or anything like that. That's not what I'm looking to do. I'm just looking to create a vehicle that people can invest alongside with me, where we can all benefit.
I like that. And what I'm seeing is the future is bright for you and for anybody else that wants to join, and just leveraging your expertise.
Yeah, that's really where I bring the value, is taking my 20 plus years of experience investing in real estate and in the residential space. And especially a lot of the lessons that I've learned and some of the tough things that I've had to, people are able to invest with me and not necessarily have to go through some of those tough lessons that I've had to go through, losing money in different deals. And right, you invest, I don't care who you are, if you invest in real estate long enough, you're probably, unless you're just super lucky, you're probably going to lose some money here or there. And, I've made some adjustments and I'm doing things a little bit differently to try to help reduce those chances. That doesn't mean it can't happen, but I'm just trying to reduce those chances. And so, yeah, I think it's going to be a great ride.
Yeah, I'm excited to hear the future and follow up with you in the next 3 or 4 months, but years from now to see how things are going. And I know you out there are going, this is transition from corporate world to be an entrepreneur. But what I'm doing here is I'm building a baseline of what Brian's doing. It's big. I mean, we're talking millions. It's not thousands of dollars, it's millions of dollars of a fund he's building. So it's not like he's not probably losing a little bit of sleep. He's probably not a little worried, and that's not a bad thing. Your concern is probably a better word. So we're going to do that. I want to take a break, 3-minute break. We'll go get some water. But we're going to talk about Brian, the entrepreneur. He's got some cool things that he's going to tell us and learn about. So give us about 2 minutes and we'll be right back.
Welcome to our show. Together we serve. Welcome to our show. Sit back and enjoy. We will talk with people about their stories with our host Tim Ramona.
Part 2, Together We Serve TV show. I'm excited about this part. I love what we learned in the first part with Brian about what he's doing. It's big. It's going to be huge, and I know he plans on being really big. But remember, he came from the corporate world, as he told us. And I don't say he woke up one day, but he decided to be an entrepreneur. And we're going to learn his lessons that he's learned from the corporate world to now an entrepreneur, what he learned that you can learn. If you're out there an entrepreneur, you're going to learn a lot of great things. If you're an 8 to 5 and want to be an entrepreneur, start your own business on the side or full time, I think Brian's going to give you some really good tips to be able to get through that. Let's stop the little jazz. It feels like elevator music.
Relaxing.
So Brian, you're an entrepreneur. Why the heck did you do it?
You know, well, I think that has a lot to do with just I watched my dad growing up, actually. So he's a skilled laborer. He lays flooring and things like that for a living. Although he's finally, now that he's in his 70s, finally slowing down. Took him long enough, but so he had his own business, but it was, for most of the time, it was a business of one, right? He did everything himself, and so I think that was always kind of there in the background for me. But I learned a lot about, we all learn our lessons differently. I learned a lot about money and how to build wealth, kind of not from my parents, kind of learned some of the things not to do from my parents. I love them to death, but not the best with money. And so, but I had a little seed planted when I was in economics class in high school, where we had to track stocks in the paper. And that kind of got me interested in investing. And I'm going to date myself a little bit here, but when I graduated, I went to the library, started checking out books and stuff like that to learn everything I could. Internet wasn't that big then. And so just learning everything that I could about investing, and it really just interested me. And so that's where when I joined a large financial services firm here in San Antonio, shortly after that. But that just kind of planted the seed of investing. And I knew, I was a stockbroker for 10 years, but I knew that there was other ways to build wealth, and it wasn't just at the 8 to 5, 9 to 5. And I don't know, I just had that bug that I think I've just been an entrepreneur. I was kind of, like I said, I've been investing in real estate for over 20 years. And so it wasn't like I just became an entrepreneur once I left my corporate job. I had been doing it on the side for a long time. So it wasn't a situation where, I just was like, okay, it's time, let's go do it. I had already been doing it for a while. So it did make the transition a lot easier. And I think for people listening that are they have a 9 to 5 job, but they want to do something else, I think one of the best ways to do it, quite frankly, is to do it on the side for a while and see how it goes. You may not like it. And then you didn't leave your job for another job that you ended up not liking. Now, I will say, for all those people that are successful doing it that way, there's also people that just jump in and just with 2 feet and go for it, and they can be extremely successful because you are able to focus 100% of your energy on that venture, on that business, whatever it is you're trying to do, versus trying to do it on the side. It can be very hard. I would say the best time to do those type of things is when you're young. If you're single, even better. If you have no kids, even better, right? Because it's, one, you've got more time. 2, it's less stressful. And so that's kind of, I think that was one of the things that helped me get started in the entrepreneur space, was actually having that 9 to 5, but also not having, kids and things like that. That actually made it easier. And it allowed me to take more risk. And so I've never been one to shy away from risk. I also have a thirst for knowledge in different types of investments. I've invested in so many different types of things. We could go on and on about all those different types of things that I've invested in. So I have a thirst for knowledge too. But it really comes down to, that's kind of just where my passion is.
What's the difference between corporate and being an entrepreneur for your eyes?
Yeah, it's we were talking about mindset earlier. It's a different mindset. You have to have a lot of self-motivation if you're going to be an entrepreneur, because in a corporate job, it's like, you're kind of forced to be motivated, right? If you don't do your job, they'll find somebody else that will. So you're kind of forced to, from that perspective. And as an entrepreneur, you have some of that, but you don't necessarily have a boss, checking in on you every day or every week or doing quarterly reviews or whatever to make sure that you're doing what you're supposed to be doing. And I think it's even more challenging nowadays with working from home. I work from home a lot, and with being able to work from home, it's great. It's great flexibility, but the TV is not far away either, right? And so that's definitely a thing that you have to be cognizant of, and I think one of the other things I would say too that actually made the transition easier for me is, and this is something you can't really replicate, but COVID, with the company I was working for, I was working from home for about 2 years straight, and I was still obviously working with a lot of folks, but it's a different kind of connection you have with folks when you're working remotely versus in person. And I think some of that connection was lost a little bit, and so it actually made it a little bit easier to leave, because I didn't have that same connection to some of the folks in the company that I would have had I been working in the office every day.
Yeah, don't work in a job if you think you have the greatest friends in the world. Friends are great to have friends, but if you're just there because you have great friends, I don't think that's a good play. And that's okay. And this is different for everybody. So let's do the flip side. What's the hardest thing about owning your own business?
Making some of the tough decisions, and I think even further than that is having the strength to continue to move forward in the constant, with so many obstacles put in your way. It's really easy to want to quit when there's so many. I mean, when you're an entrepreneur and you're starting out, and even when you've been doing it for a while, like I have, you still run into obstacles. There's things that, with some of the stuff I've been doing for a long time now, I'm like, oh man, I could have been doing this differently all this time, and I'm learning lessons now that so you're constantly learning. But I think the biggest thing is being able to overcome a lot of those challenges, and having the fortitude and the strength to be able to do it. Because it's easy to say you're that way, but it's another thing to actually do it. And to be able to pivot and adjust your business, because when I left my corporate job, I was planning to do things a certain way with my real estate business. And then interest rates literally within months spiked, and we went on the historic interest rate hikes. I had to totally shift gears on how I was planning to take my business. And had to learn a lot of valuable lessons on some of the deals that I was involved in that didn't go as planned. And, so it's being able to learn those lessons and take those, for me, it's, taking those horrible situations or those really difficult lessons and turning them around into a positive, but not focusing on them. You take the lessons that you need to learn from it, you implement it, and you move on. You don't look back. You just have to continue to move forward. You do have to be very positive with yourself too, because it can be very easy when you struggle and you have some of these setbacks to get very negative and down on yourself. I think one of the biggest things for me is just trying to stay positive and surrounding myself with other positive people. You definitely don't want to surround yourself with other negative people. And as your network is your net worth, right? And so it's so important to surround yourself with the kind of people that are doing the kind of things that you want to do and that are being successful.
And we're in the same boat. I'm a podcast host, TV host with partnerships. Kind of like you, I do partnerships with business. You do them with companies. The one thing is community or tribe or whatever word you don't do this alone. I reach out to people. I have a mentor. You mentioned all these people that are doing these properties. You have that group that you work with. I think that's essential too, which you mentioned. I think the other thing, talk about decision-making, because I think as an entrepreneur, they jump in and go, do I spend $10,000 on coaching? Do I need the coaching? And then they become indecisive and nothing happens.
I think the coaching can be valuable if you get the right kind of coaching. So I do have complete transparency. I do have a business coach that I actually got prior to leaving the corporate world. He was able to help me with some of those mindset things that I needed to change in order to take that leap and have that confidence to do that. And so, the coaches, having different types of coaches can definitely be helpful, mentors. There's so many different ways to do it, and I'll jump back to the corporate world here for a second. I know on your podcast, I think we talked some about networking too, and the importance of that, and how important that is. And I think I mentioned this story on there, but for those that maybe didn't hear that, I'll mention it here. The networks are probably one of the most important things you can do, whether it's in the corporate world or you're an entrepreneur. It doesn't matter, because you never know when there may be some benefits for both of you in the future. I went and spoke at a local college here in San Antonio, and that was one of the things I told those kids was, focus, like build your relationships now, network now while you're in school. I wish I had done that. I didn't do that. I didn't appreciate it at that time. But there's so many, especially at that age, there's so many people that you're going to be able to meet. You're going to have an opportunity to meet, and it's just so invaluable. But going back to the corporate world thing real quick, I had my boss's boss. We had implemented some technology at work, and he took the fall for it not working out. Right, whether he was really to blame or not, that's not the point. The point is that he took the fall, but he made it a point to have breakfast with some friends outside of work at different companies on a regular basis. And because he did that, within a week, he had another job. And so that just shows you the value of networking and building connections, because you never know when there may be a benefit there. And don't look at it like, well, when are they going to benefit me? Just look at it like, and we talked about this, each new opportunity, each new person you meet is an opportunity to make a friend. Just leave it at that, and just stay connected. Now, it doesn't mean everybody you meet you're going to want to stay connected to. There may be people who's like, no, that's all right. I don't need to stay connected to that person. Maybe just personality conflict, whatever. But yeah, networking is huge for sure.
And a servant's heart will say no. You don't fit my circle, or no. Like in your case, hey, I've got $1 million. I want to come in, but I'm going to be on you every day, calling and just being a pain. And you know what? You're going to be. I don't think this is a good marriage. I love business marriage, because it's no different than when I got married. I met my wife, and we met a long time ago, reconnected. We didn't marry the first day we went on our first date. Hell no. I mean, some people have done it, and maybe it's worked, but let's look at the generality of it. Same with business. You meet somebody, start building that relationship.
Yeah.
Because, what people forget is it's not who I know Brian, but it's who Brian knows. I know Steve, but who Steve knows. I've given you some introductions because of some people that I know in my network. So I love that you said that. One thing I'm always curious with entrepreneurs is coping with the struggle of the transition. Because it's not like you turn a light switch on and go, I'm going from corporate stock market to my hedge, to doing my fund, Head Start equity. It just doesn't flip a switch. Talk about that.
Yeah, that was, it was a challenge. And I think, this is kind of little detail, but one of the challenges I faced was being efficient with my time. What I in the corporate world, you have a lot of meetings scheduled for you, right? People, that you're collaborating with, they'll schedule a meeting, and so you're working and blah blah blah. When you're an entrepreneur, you have to do that yourself. And so what I learned to do, and I still struggle with it sometimes, because none of this stuff is an exact science, or maybe it is, I just haven't figured it out. But time blocking is something that has really helped me, because what I found is that if you don't time block things, right, important things don't necessarily get done. Sometimes you'll want to gravitate toward the easy things because you can check it off a box, and it's, you can get a bunch of check marks for the day. That's great. But were those really the most important things? Could those have waited a few more days or a few more weeks so that you could get this other thing done? Because I had situations when I first left where there was things I needed to do, and it would take me months. But then I would time block, and I would get it knocked out in a day. It's like, what was I wasting all this time? Like, and then the whole time you have it over your head, because you're like, I know I need to get this done. And so you're stressing about it because it's there. If you just would have time blocked it, it would have gotten done much faster. So that was one of the most valuable lessons that I learned was time blocking. And one of the more recent things that I've learned kind of in that vein is you really have to protect your time. Especially when you do start getting a little bit successful, people will start reaching out to you, and it's great. And like I said, I'm more than willing to try to help talk to anybody that needs help with real estate and stuff like that. That's not what I'm talking about, but you do have to protect your schedule and your time, because, well, as everybody knows, right, time is really the most valuable asset. So you do have to protect that. And, I get hit up all the time on LinkedIn, hey, can I set up a meeting with you? I'm like, okay, well, what do you want to talk about? I don't want to just jump on a meeting. What do you want to talk about? Where are you seeing the synergies? What's the point of the, not the point, but what's the purpose of the meeting? Don't be afraid to ask those kind of questions, because that was something I wasn't necessarily, I was kind of just going with the flow. Like, okay, cool. Yeah, we can have but you do have to protect your time. And I know that's something that is extremely valuable to me, obviously I've got 2 kids and a wife. And so, if yeah. And it's not just, well, I'm doing that during the day. I'm taking that meeting during the day, so it's not that big of a deal. It's not impacting my family. Well, it is, because it's taking you away from being able to do something else that you need to get done, probably, that you may have to do later. So those are a couple of the things that I learned kind of transitioning from the corporate world to the entrepreneur space.
Well said, Brian. That's why I'm so glad he's on the show, because I just LinkedIn yesterday. Some guy reached out and said, "You looking for more clients?" I kind of knew what he was doing.
Right.
And I said, absolutely. I'm looking at it. Great. Hey, let's jump on a call. Same exact thing. I'm like, okay, if this is something that's a paid version, I get 10 leads a day. I don't need leads. He come back and said, oh, well, I can't do this for free. I said, no, I understand. I'm not saying that, but he goes, okay, I appreciate you. It's like, I don't need your service. And here's a lesson. And Brian, you led this off. Don't pitch, because this guy, I could have introduced him to a number of people, but he really kind of pitched me a roundabout way. Just go, hey, I want to jump on a call and get to know what you do. I want to jump on a call and get to know what you do. And leave it at that, and make it short. And here's the other tip. If you have a 30-minute call and it's not working, at 15 minutes, go, I really need to get going, and just, I think it's honest, because it's not fitting, right? But 15 people go, what's just 15 minutes? What could me and you do in 15 minutes? 2 phone calls, send out 5-10 emails, answer 5, so
right.
Keep that in mind. So I so appreciate you saying that. The other thing you talked about on the podcast, and you gave me some notes on, is ideation. I don't understand the word the best, but it's about ideas. But creating ideations for your business as a part of being an entrepreneur. I have a tough time with that. I'm creative, but ideation's tough. How do you handle that?
Yeah, and that was tough too, because coming from the corporate world, you just all jump in a room and kind of brainstorm and try to come up with some ideas and stuff like that. Now you're one person, right? And so I've had to. So I do lean on my wife too. Some she definitely helps me out with some of the ideation and stuff like that too. But I've had to have, I remember when I used to work at the company I did, we would have these offsite working, sessions and brainstorming sessions and stuff like that. And so it took me a little while. I was like, okay, well, I guess I need to do that for myself, but it's just going to be one person. So I'm going to go somewhere, just get out, be in a different location. Maybe, vibes will be a little different. My brain will be a little clearer, but it's amazing how you can do that if you just kind of really sit down and focus and change the atmosphere a little bit. So that was kind of, I guess that was kind of how I did it. And that seems to work well for me.
I like that. Hey, the wife, happy wife, happy life. We hear it a million times. You just made your, being part of your business. And if your wife doesn't know what you do, you wouldn't go there. But I like the ideas, having that tribe. It's one person or a number of person you get about ideas off of. It's hard to be an entrepreneur alone. You're alone in your business, but you don't do business alone. I just made that. That was pretty good. Audience, hey, I just made that out. That's actually pretty good.
That's pretty good, yeah.
But that's the point. Thank you. That's the point that I like that you're making. What is one mistake that you learned or challenge as an entrepreneur that you want to tell the audience, and how you solved that?
Ooh, one mistake. I would say not going outside of my comfort zone sooner. So, yeah. So I did learn a little bit of a valuable lesson after I left my corporate job. Couple things. This isn't necessarily quite related, but I'll just kind of say this because it kind of dawned on me when I left my corporate job. I'll be honest, I didn't. It wasn't like I was a bad dresser at work. I didn't come in shorts and stuff like that. I was a little more of a casual kind of guy at work, and we had a casual dress, but I did have, I'd have people, hey, Brian, you kind of need to dress for the job you want, type thing, kind of nudged me a little bit. It's like, okay, cool. And of course I never changed. And then I left. And then when I left, I ended up going and buying a nice jacket, some nice jeans, right? Nice shoe, just a nice outfit and stuff. And then it dawned on me, I was like, well, they always say dress for the job you want. Well, there was nothing at that job that I wanted. There was nothing there that I wanted. And so that's why I never really dressed for the job that I wanted, because it wasn't there. It took leaving the corporate world and doing my own thing and finding my own niche. Then I wanted it. And so then I was willing to make some changes. So that was kind of an interesting thing. But going back to the comfort zone thing, I did, going on podcasts, doing this. I think I've done like one other live thing. It was like a 5-minute thing. So this is outside of my comfort zone as well. But just doing speaking and things like that, that's something I'm still trying to do a little bit more of. But I think that's one of the biggest things, and it's an ongoing thing for me, is just going outside your comfort zone, because really the reality of it is success is on the other side of that, right? You have to be able to do that. If you're gonna grow, you can't just stay in that space that you're in. You've got to be able to go outside of your comfort zone. And quite frankly, going on podcasts and stuff like that, that was something I never would have even thought of doing when I was working at the company I was working at. But then it became a thing where it's like, well, to succeed in this business, you need to get out there. You need people to know who you are. And I'm not a good marketer or salesperson. So but I knew it was something I needed to do. So I just kind of stepped up and did it. So I think that's something I continue to struggle with a little bit. But that's probably one of the biggest things that I've learned, is just, you need to go outside your comfort zone and be okay with that. Be okay with being uncomfortable.
Well, and that's what I say. If you're going to be an entrepreneur, uncomfortable makes you comfortable. That's where you will learn. And I appreciate you saying that about podcasts, and this is a TV show being interviewed, because there's so many opportunities out there that get your part of the internet out there talking about what you do, what you're passionate about. Yeah. And I tell people this is like a one-on-one discovery call, but now thousands of people are going to hear it or see it, down the road. And to me, it's such a great marketing tool and puts you out there. I'm going to, we're coming to the end here. Time flew by so fast, but every time I talk to you about finances, it does, because I get so excited. Give me a couple minutes of what you want to leave the audience with about being an entrepreneur and finances.
So, being an entrepreneur, I think it really, surrounding yourself, kind of like what we talked about earlier, surrounding yourself with the right people, and don't surround yourself with negative folks. And sometimes you have to make some tough decisions about who you're going to hang around with. And, you may have some folks that, are really negative, and, you consider them a friend, but if they're going to bring you down, or talk to you about how you're not going to be successful in what you're trying to do, you probably need to really reconsider, is that the right type of friend to be hanging around with? I think it's very easy to start hanging around folks that are very negative, or not driven individuals, and then start falling into that trap a little bit. And so you have to really guard your mind and be careful what you let in. And again, like I said earlier, you're going to become the people you surround yourself with. And so, if you want to be a millionaire, you need to surround yourself with millionaires. That's just the reality of it. And so, that's one of the things I would say, in the financial space, in terms of that, I guess one of the things I would tell everybody is, you have to do what you're comfortable with. And, having been a stockbroker and financial advisor, there's obviously all these models, and say, if you're this age, you should have this percentage in stock, this percentage in bonds, whatever, this much in cash, gold, all that good stuff, right? I guess these days it's crypto now, which I have invested in, but that's a whole nother story. And I was totally okay with losing all of it. But anyway, so, don't necessarily, you don't have to follow those models, I guess is what I'm getting at. Stick with what you're comfortable with, because if you go too far away from what you're comfortable investing in, you're going to make some bad choices. You're going to make some bad decisions. And again, you might get into something that is too high of a risk for what you're comfortable with. And then you're going to be selling at the worst time. And so I would just say, definitely educate yourself, surround yourself with people, but try to just learn as much as you can about investing. and don't get sucked too much into the mainstream stuff. Try to find out what you're comfortable with, what you think you're good at investing in. Just like a job, right? I mean, there's some things that we grasp better than others when it comes to investments, and maybe we resonate with a little bit better. And it's like Warren Buffett says, right? He only invests in companies he understands, and so that would be kind of probably the moral to the story on that piece.
Thank you. I love that. And you can reach Brian. You've been seeing his LinkedIn scroll across the bottom there. That's the best way to reach out to you.
Yes, it is. Yeah, or
Do
just that's the best way.
Yeah, we'll just do that, and then he can critique you, see how you're connecting with him. Connect for building a relationship. Next week, I want to thank you all for listening. Brian has been incredible. I knew he would be. Next week, we've got Rami and Chase. Chase helps nonprofits be transparent. And Rami, you need to hear, has been a homeless 3 times. He's been a billionaire 4 times. So he's actually lost everything, and now he's back to be a billionaire. He's going to talk about his homeless city he's building of 1 million people where they'll live for free. So we'll see you all on the next episode next week of Together We Serve. Thank you.